risk appetite seems to be building again in the market with more signs of an economic recovery, but we've also seen a rise in volatility too. Despite that, the gold price almost reaching a new all-time high, and that's really been good for our gold stocks today. But do you think we can sustain these levels?
Yeah, I think gold has done really well. Must be looked at in context. I think over the past 12 months, it's the top performing category on our JSE. Again, a very good day today. Following mainly on a weaker dollar, we've seen the dollar reach new lows today. Generally, gold is essentially a hedge on inflation. If we look globally, the stimulus has been phenomenal, and we think in the long term, gold should benefit from a weakening dollar.
Of course, at the same time as the gold has benefited from the weakening dollar, the rand has also. And despite that strong rand, we had gold shares rising very strongly today. In fact, most of the top movers are mining and gold shares on the JSE today. So why do you think gold shares are so bullish at the moment?
Well, you mentioned risk at the beginning, and I think if we look at emerging market bond spreads, they are reaching new lows again following the recent volatility. So essentially, the money in developed markets are earning practically nothing in the bank accounts, and these funds are looking for an outlet, and they've been going into emerging markets, which is why the rand would have strengthened and why our market has done reasonably well as well. Our gold price, I think, contrary to what many people believe, the South African gold companies have diversified their asset base. So they're not as dependent on the rand gold price as before. I mean, if you look at Anglo Gold these days, only 40% of their gold ounces come from South Africa. I think Gold Fields is closer to 60% from South Africa. Harmony is a bit of a more South Africa base, but Anglo Gold now, which is essentially our largest holding, is more geared to the dollar gold price than it is to the rand gold price.
Okay, so it really is getting the benefit of the gold price going well above $1,000 an ounce then?
That's right, yes.
How about some of our other resources counters outside of the gold sector? We know that there is a bit of a question mark over the future of commodity prices, whether they can sustain the strong gains they've had, such as the copper price. I mean, do you think that we are going to see our resources counters continue to improve, even though we don't know where demand is going to come from in the short term?
I think on the rest of the resources, we are a bit more cautious. We saw Billiton's announcements this morning saying that the longer term they are bullish, mainly driven by Chinese infrastructure as well as Chinese consumer spend. And they covered quite a few metals which long term they're talking 2015, 2020, 2030. Now that's the very long term, and that we can understand. I think in the shorter term, the inventory build-up in China has been very strong. If we look at the amount of money supply that has been pumped into the Chinese market has been phenomenal for the current year, and we think a lot of that speculatively went into commodities and into inventory building.